Hello, friends. Now, I would like to discuss the remaining part of your Unit 3 Merchant Banking. This is the fifth lecture that we are going to discuss, and would be the last lecture on merchant banking. In all the previous lectures, we have already seen the merchant banking, its functions, and all that. And in this lecture series, I would like to discuss on merchant banking in India, how a merchant banking emerged. There are four important things that we need to discuss in this lecture. One is qualities of merchant bankers. Second one is merchant banking in India. Third one is commercial banking versus merchant banking. What is the difference? How both are different? Merchant banking players in India. We'll discuss one by one. Looking into the qualities of the merchant bankers, there are around five important qualities that any merchant banker should have to be successful in the field of merchant banking. If any one of them is missing, I think such merchant bankers will not be flourishing, will not be growing in the financial market. And if at all you want to take your career in the field of merchant banking, then you should acquire these qualities compulsorily. Though it is very simple to tell these qualities, but acquiring these qualities requires a lot of efforts. So we should say it is not only the qualities, it's the skill of the merchant bankers, how they provide services to the clients, to their companies, to their customers. So they require these minimum qualities. One is ability to analyze. What kind of analyzing ability that a merchant banker should have? They should have correct touch, continuous touch with the financial market, and they should be able to analyze the financial position available in the market. Ability to analyze the share market, ability to analyze the company's strengths, financial strengths, ability to analyze the investors' motives, investors' behaviors, and all that. If they can analyze, they can predict the financial market, how it would be in days to come. In future, prediction can be made based on the present analysis. And if they have this kind of ability to analyze financial positions, then they can advise better to their clients. So the one basic quality should be ability to analyze. This ability to analyze comes to merchant bankers only if the experts are having a perfect touch with the market, and if on day-to-day basis, if they can understand how market, financial market is sensitive, how it is responding, they can easily analyze the financial possibilities in future. Therefore, ability to analyze is most important. The next one is abundant knowledge about the financial aspects. Abundant knowledge relating to financial aspects. What is this abundant knowledge? Knowledge refers to the information they should have. They should have full ability about the SEBI regulations, knowledge about the Securities Exchange Board of India regulation, knowledge about the Companies Act, full knowledge about the market instruments, full knowledge about the procedures followed while issuing the securities, full knowledge about the customer rights, investors' rights. So all these knowledge they should have. If the knowledge is lacking, any point of time mistake is committed, they will be under trouble. Therefore, they should have the preoccupied knowledge about the total aspects of a financial market. Next one is innovative approach. They should have an innovative approach because while providing the services to their clients, they should have an ability to innovate things. For example, how the market should be, how the securities should be introduced, in what, at what time the security should be opened up, when the customers, investors are more interested to invest money. All these what you call is knowledge should be there, and it should be innovative. They should experiment the possible things to achieve their objective. The basic objective of this merchant banking is to provide best services to their clients. So this is one. Integrity is one more, that the integrity refers to the trust that they should create with their clients and with the investors in the market. When a merchant banker creates the goodwill in the market, goodwill refers to the trustworthiness of that particular services provided by the merchant bankers. Investors will also believe them, and their clients will also believe them. So this ability should be there. So integrity cannot come so easily. It comes by continuous practice of ethical practices, truth, and what you call as the uh, integrity kind of a thing. It comes only when they practice ethical practices in their business. So in order to help the client, they should not give a what you call as the wrong information to investors, or in order to protect their clients, they should not unnecessarily what you call as create the sensitive market, and ask the and make the investors to invest money and deceive them up. So this is where the merchant bankers will definitely get a bad name, and once they get the bad name, so they will not be allowed. So this is one of the important qualities, ethical practices in financial market, because investors may be investing money keeping the trust on the intermediaries like merchant bankers and all that. Next one is capital market familiarity is most essential. As we have seen, abundant knowledge, capital market plays a very important role. So knowledge about the capital markets, its sensitivity must be known to merchant bankers. So these are the basic 5 important qualities that we need to acquire to be a merchant banker. So to build a career in the field, so these are the important qualities. We'll see next merchant banking in India, how merchant banking came in India. Earlier, there was no merchant banking before 1967. So Foreign National Grindlays Bank started the merchant banking in India in 1967. Though the financial market is as old as the economic system in the country. The India's BS stock exchange is the first stock exchange to be established in the world. But actually, the merchant banking started in the year 1967. Earlier, the companies themselves used to float their shares through their appointed executives of the company, and the stock exchange market were operated. But the merchant banking came in the year 1967 with the innovative idea of the Foreign National Grindlays Bank in the country. Then in 1970, Citibank started adopting it, and State Bank of India in 1972 started merchant banking. Later, ICICI set up its merchant banking division, followed by Bank of India, Bank of Baroda, and Canara Bank. You must be knowing that because of the Narsimhan Committee, which is appointed uh, in 80s and all that, it has given the suggestion for improvement of the banking activities. The Narsimhan Committee has implemented the diversification role of the banking sector in India. And based on the recommendations of the Narsimhan Committee, the bankers were allowed to diversify into capital market services also, instead of only taking the loans and the advances, and provide instead of taking only deposits. So therefore, every commercial bank established a separate wing called merchant banking, and they tried to enter into the field. Under this light, State Bank of India, Bank of Baroda, Canara Bank all started providing services through the separate registered merchant banking in India. And the funds of the bank is channelized for merchant banking activities. This has helped the bankers to earn maximum amount of profit and providing the best services to their clients. So the role of bank has increased in the field of capital market, in the field of financial market like that. So this is relating to merchant banking in India. What is the difference between commercial banking and merchant banking? If you see the pure commercial banking activity, based on the function, you can differentiate between the commercial bank and merchant bank. All commercial banks are not merchant banks, but some of the merchant banks are from commercial banks, because commercial banks have extended these services in addition to the banking activities and started entering into capital market and providing the services to the clients. So the commercial bank, if you see, the main focus of the commercial bank is on savings, collecting the deposits from the public, account loans, credit cards, then credit to business and business brokerage services, etc. Only this much. But if you see the merchant banking focus on financial consultancy and advisory services to the uh, both investors as well as issuing companies. So it enters into that capital market, which is untapped by the commercial bank earlier. So commercial bank is only concentrating on accepting deposits and providing the loans and advances, whereas merchant banking provides financial consultant advisory services. Then how they make money, if you see the profits, how banking company makes profits, and how merchant banking makes a profit. The merchant banking makes profit, the commercial banking makes a profit by issuing loans, issuing mortgage loans, and by providing a small business and home loan improvements, and any interest it collects on these loans is always higher than the deposit what it collects from its client, its customers. So the difference between the interest paid on the deposits and interest collected on the loans and advances is the major profit for the commercial banking. And apart from that, it provides a agency services. For that, it charges certain fees like a transfer of money, NEFT, RTGS, and all that. So that is one more income for the commercial banks. Whereas if you see the merchant banking profit from the fees, it charges its large customers for the services it provides, like financial consultancy, advisory services, underwriting activities, and all that. For all these, it charges a huge amount of particular fees, and that is the major income for the merchant banking. So when the commercial banking diversified their business into commercial merchant banking, they started earning abnormal profits, and this has developed the banking strength in our country. And third one is effect on the economy. If you see, provide money for loans and also for expansion of the business is the main effect, whereas the merchant banking provides money to large corporations. So the main focus of this commercial banking, the impact of this commercial banking is for the small business holders to start the business. It provides seed money like loans to the small business entrepreneurs, whereas this merchant banking provides services to large corporations which are doing a wide businesses by providing the creating the financial market for these companies. If you see the investment, the commercial banks cannot buy securities more than 5% of the net incremental deposits of the previous 5 years. It means that the maximum investments that the commercial banks make in the stock market should not be more than 5%. It is as per the guidelines of the Reserve Bank of India. If you the difference of the profit compared to last year to this year, if it is 1 crore rupees, the investment it can make in the securities market, it can buy the securities of the companies to the extent of 5%. That is, if it is 1 crore, it should not exceed 5 lakhs. That is the major this one, it can issue only to that much of money. So the investment part is very much limited for entering into the stock exchange operations. Whereas the merchant bankers do not have such kind of regulations, because the nature of the merchant banker is to create capital for investing in the sectors, in the financial sector, buying the securities and all that. That's why merchant bankers can act like underwriters. Merchant bankers act like issue managers, because at any point of time, if capital is to be invested, they can invest capital, hold the securities, and whenever the market comes for the securities, they can sell it. So the merchant bankers investment ability is more than the commercial banks. That is why, in order to utilize the financial collection of these commercial banks, most of the commercial banks are diversifying into merchant banking in order to get ease of investing in the capital market, where a lot of profit is available. If you see, the main merchant banking companies operating in India, the merchant banking companies in India can be classified into two sectors: public sector and private sector. When the public sector banks are diversifying into merchant banking activity, they're called as public sector banks. So these are all the banks which are nationalized or supported by the government funds. Government has invested money in this. It is not public limited. They are all public sector, because all merchant bankers are normally public limited companies. But if you classify them, one is a public sector, another one is a private sector. Public sector is one where the government has invested money for establishing these organizations, and they are diversifying into merchant banking. And we have private sector, where no government investment is there, 100% investment is from the private, where these companies collect the money from the private people in the form of capital, and then that capital is being utilized for merchant banking activities. If you see the diversified nationalized banks in the public sector, the first one stands the State Bank of India Capital Markets. So the State Bank of India Bank has diversified into capital markets and registered as a merchant banker and providing the merchant banking services. We have Punjab National Bank diversified into merchant banking. We have Bank of Maharashtra, then Karur Vaishya Bank Limited, then State Bank of Bikaner and Jaipur, and IFCI Financial Services Limited. Though the merging has happened in the commercial banks, but there is no merging of merchant banks. Still those old banks holdings are there, and they are working like a separate entity other than the commercial banks. But all the funds are diverted from the commercial banks to these capital market agents like merchant banking activity. So we have these many public sector and merchant bankers: SBI Capital Market, Punjab National Bank, Bank of Maharashtra, Karur Vaishya Bank Limited, State Bank of Bikaner and Jaipur, IFCI Financial Services Limited. And if you see the private sector list, we have abundant list of private players like ICICI Securities, Industrial Credit and Investment Corporation of India, Securities Limited, Axis Bank, Bajaj Capital Limited, Reliance Securities Limited, Kotak Mahindra Capital Company Limited, and Yes Bank Limited. So Kotak Mahindra is having a bank also. You can keep the deposit as a say SB account or money with a Kotak Mahindra as a bank. And Kotak Mahindra is also a merchant banking, where through the Kotak Mahindra you can buy mutual funds, you can buy securities, shares, and all that. So both the SBI Capital Market is also like that. You have State Bank of India, where you can open an account and keep the fixed deposit, or you can buy the mutual funds through SBI merchant bankers. So these are all the various facilities provided. And so we have classification of the examination question may be asked, differentiate what are the various merchant banking companies operating in India. Kindly refer to this, read it, and present it in the examination. The next one is we have some key foreign players, like foreign companies are also working, as we have already seen the Greenlace Bank and all that. Initially they have started. So we have major commercial, major foreign financial institutions operating in merchant banking market in India are the Goldman Sachs Securities Private Limited. So very uh, big company to provide. Morgan Stanley India Company Limited, Barclays Securities Private Limited, Bank of America and Citigroup Global Markets India Private Limited, DSP Merrill Lynch Limited. So these are all the key players in our market coming from foreign countries. So with this discussion, I would like to finish out module number 3, and I'll share the assignments to be assignments required. So please prepare well for your examination. Most of the questions may appear from this uh, module. So I wish all the students best of luck. Thank you. Good day.